Very good morning. Wishing you a terrific Tuesday ahead. Welcome to today's episode of Morning Well. Yield stabilized, stocks soar, Bitcoin pushed above $49,000, better PMIs, and RBI meets today. Those are the three things that we will talk about. The stock market roared back after a tough week with the S&P recording its best day since June. Financials helped lead the way, up 3.1% in the S&P 500 as investors continued their bet that elevated treasury yields will be good for lenders. But the tech stocks also bounced back strongly with the communication services sector rising about 3.2%. Perhaps the most potent force in investors' minds is not where the rates are, but their upward trend as a reflection of solid economic activity. It may also be a relief that rates were simply more stable after gyrations last week. Treasuries have been finding buyers at higher yields. The benchmark 10-year yield on Monday dropped back to about 1.43, down from about 1.46 at the end of trading on Friday. The S&P 500 was higher by 2.4%, the Dow Jones was higher by 2%, and the Nasdaq was higher by about 3%. Monday's gains were broad-based, shared across the market with all 11 sectors of the S&P 500 posting gains. Tech stocks were the best performers with the sector rising about 3.2%. In other corporate news, ExxonMobil was up 3.7% after the oil major, which has been under pressure from activist investors, added 2 new board members. Boeing shares rallied 5.8% after United Airlines said it was buying 25 new 737 MAX jets. A boost for the aircraft maker that is still trying to recover from the jet's nearly 2-year grounding. Class B shares of Warren Buffett's Berkshire Hathaway climbed about 3.6% after the conglomerate on Saturday posted an increased fourth quarter profit and reported that it had bought back nearly $25 billion in shares last year, a larger than usual buyback for Berkshire. Lastly, Johnson & Johnson added about 0.5% after the US over the weekend authorized its single-shot coronavirus vaccine. On the earnings front, Zoom Video reported they projected an annual revenue that could top analyst estimates. Shares jumped 10% in extended trading. Sales will be as much as $3.78 billion in fiscal year 2022, the company said in a statement on Monday, while the projected annual revenue growth of 43% is far short of Zoom's 326% increase in the fiscal year ended Jan 31st. It topped the 37% average estimates of analysts according to data compiled by Bloomberg. Profit excluding some items will be as much as $3.65 a share. Analysts had projected about 2.97. On some crypto news, Bitcoin pushed above 49,000. Citi said the token may play a bigger role in the global financial system, and Goldman is restarting its crypto trading desk. China's Inner Mongolia banned crypto mining and declared its intention to shut all such projects by April, spurring fears that the country will take more steps to eradicate the power-hungry practice. Dan Loeb said that he's doing a deep dive into crypto lately, and MicroStrategy purchased more Bitcoin to raise the enterprise software company's holdings to more than $4 billion. Lastly, on the FX front, the month of March kicked off with a strong rally in equities that saw the Dow Jones erase all of Friday's losses. The US dollar rose to its strongest level against the Japanese yen in 6 months. However, the dollar's gains were not universal as improvement in risk appetite drove the Aussie, the New Zealand dollar and Canadian dollar higher against the greenback. There are a lot of reasons for investors to be optimistic this month. Spring is right around the corner and warmer weather will bring restaurants out of hibernation and provide a more supportive environment for outdoor dining. Congress is also widely expected to pass the $1.9 trillion stimulus bill this month. Recent economic reports also show countries around the world survived the second virus wave better than the first. Despite strict lockdowns, Eurozone and UK manufacturing PMIs were revised higher for the month of February. Both indices were well above the key 50 mark that separates contraction from expansion. The US ISM manufacturing index also hit a 3-year high in fact, last month thanks to a surge in new orders. Demand has been particularly robust for electronics and furniture. With each passing day, as more people are receiving the COVID-19 vaccinations and with weather improving, travel and spending should pick up. The Australian dollar was the day's best performing currency, and its strength might be a problem for the Reserve Bank. Last night, RBA surprised the market when they announced an Aussie dollar 4 billion worth of bond purchases. This follows an unscheduled 3 billion Aussie dollar purchase of short-term bonds on Friday. The central bank is taking aggressive measures to stem the rise in bond yields. While everyone has been focusing on the US Treasury rates and the German Bund rates, Aussie yields experienced a similar surge. At the beginning of February, the 10-year Australian bond yield was 1.12, and this past Friday it hit a high of 1.91. Just as rising yields threaten the recovery, so does a strong currency. Aussie US hit a 3-year high last week. Look out for some verbal intervention that could be an easy way to halt the rise from the RBA later today. That's the update. Stay safe and healthy, and I'll speak to you tomorrow.